All right, guys, what's up? Michael Edward here, head trader at True Trading Group. Coming to you guys from halfway around the world. Today's day 2 for me trading in Dubai. I'm going to give a couple of minutes, let some people give them some time to log on. Guys, have a couple of minutes while we wait for some people to log on. Let's do kind of what we usually do, which is I just usually open the floor up for a basic Q&A while we wait for some people to log on. So why don't you guys feel free, ask away. We're going to be covering today in this with this recap something about very specifically the tier trading strategy. The tier trading strategy is something that no, Aaron, I don't. I don't. And tier trading strategy is something that I teach all the TGD members. It is a specific strategy that I learned to implement when I worked at the hedge fund. And I've taken that strategy and I have tweaked it so that it can relate to and it can be used in my individual retail trading. So this is going to be a really cool live stream. I'm going to talk to you guys about the tier trading strategy. I'm also going to talk to you about the importance of establishing levels before you enter a trade, identifying those levels, and then setting your price targets, your profit targets on your trades before you enter the trade. Because if it was not for those two things today, if it was not for identifying my levels before I entered the trade, and it was not for my tier trading strategy, I do not come out of this trade. It's probably just my hotel room, Chad. It's just my hotel room. The acoustics in the hotel room aren't great, so I do apologize for the echo, but there's not much. Oh, cool. All right, yeah, because even for me, it sounds like there's a little bit of an echo in my hotel room. But um, anyway, so guys, if it wasn't for those two things that we're going to be talking about here today, if it wasn't for that, then I wouldn't be profitable on the day. I was able to pull out 32% on put options in Boeing in the morning, and then Boeing ended up reversing, but we were able to take our profits off before that reversal and walk away with 32% gains rather than taking a loss in the position. So we're going to be covering that. I'm also going to talk to you guys about how you can learn about the tier trading strategy and how you guys can master it. So we're going to get into that. Before I get started with the recap on the trade, as I always do, I'll start things off with a blanket Q&A while we give some time for people to log on. So why don't you guys just go ahead, fire away, just like we do to start off all the live streams. I'll take any questions that you guys have. Nobody's got any questions? Anybody want me to take a look at any specific chart patterns or any specific stocks you want me to take a look at while we just wait a couple minutes for some other people to log on? Aaron D, why am I the best trader on YouTube? It's going to be a long answer. There's a few reasons why I consider myself. I mean, I've never said that. I just want to let you know, I've never called myself the best trader on YouTube. I don't know if you're saying I'm the best trader on YouTube, or if you're just asking me to explain why I think that maybe you guys should listen to me more so um, than some others. I think the main difference between me and a lot of the other gurus that you guys see out there on YouTube is that I've done this professionally. I worked at a hedge fund and I got a professional education. I'm not here telling you guys that if all you have to do is follow me, you guys will become millionaires. and there's like these 3 simple steps to becoming a consistently profitable trader. Those are people that are just pushing marketing tactics, and they're trying to take advantage of your desire to actually learn this. And it started out, the YouTube channel started out because I just had a lot of people that were asking me questions about trading in general. And it turned out that there was a family friend. It was a family friend. We had a family party. It was technically they're related to me now through marriage, but they were talking to me about trading, and they had joined some other group, and they had taken some other courses, and they were showing me some of this material, and it was complete garbage. It was complete crap. None of it was real education. None of it was valid information. You can tell it was just kind of thrown together, and he didn't know any better. He didn't know any better. He thought that this was some really good quality education. And then I start to take a look out there, and I'm like, this is terrible. The information that's out there is terrible. You have people that are just trying to sell you like a $5,000 DVD that make you think that you're going to learn some special secret, some special key that unlocks the keys to the market, and it's just not true. It's just not true, and it really, really bothers me because there's so many people out there that want to become a consistent profitable trader because of the freedoms that it allows for, because of what it can do for you and what it can do for your families. And if anybody understands the value in that, it's me, because if I didn't learn how to trade when my hedge fund went out of business in 2009 after the stock market crashed and we had the Great Recession in 2008, 2009, if I didn't know how to trade, I wouldn't be where I am today. I don't know where I would be. I wasn't able to find a job at other hedge funds because I was competing with traders that had 7 to 10 years more experience than I did, because 50% of all the hedge funds closed. So I don't know where it would be if I didn't have this, if I didn't have the skill set. I really don't. But, you know, fast forward now, almost 15 years later, I'm now 34 years old. And where I am today, if you asked me, 17-year-old Mike, do you think that this is where you would be at 34? I would have said, no way, not a chance. But that's the real power that this information can provide. But it's really about real information. And that's how the YouTube channel started. It started with just me providing real information, real education, explaining to you the same way that it was explained to me. I didn't know what I was doing when I first got hired at the hedge fund. I was right out of college. I didn't have all this trading experience or money management experience. I had to go through a 3-month educational program at the fund, and that's where I learned how to trade. And that's the things that I implement in my trading today. That's the stuff that I share with you on the YouTube channel. Now, obviously, I can't cover 3 months of every single day classroom style education on the YouTube channel. So that's just a kind of the tip of the iceberg that I give you guys on the YouTube channel. But it's still probably more valuable than any DVD or course that you've gotten from some other internet guru that claims to have some secret pattern. You probably can learn more in watching a 15-minute video of mine on YouTube than you do from some of these other people. And that the difference is just education. And honestly, that's the difference. And it's also the difference between successful traders and traders that struggle. Traders that just open up an account and just start trading without getting an education, they're going to fail. They're going to fail. That's the reason why you hear 90% of traders fail. It's not because trading is impossible. It's because people trade without getting an education first. They lose the money they started with, and the average person doesn't have endless amounts of capital to just keep reloading into their trading account. That's why traders fail. So, yeah, if you ask that question, Aaron, I would say that that's why I think that I'm the best trader on YouTube, because I'm actually giving you professional education. I've traded professionally. I traded at a hedge fund on Wall Street. I received the Trader of the Year award. I know what I'm talking about, and I think that I'm very good at explaining things in a way that people can understand, because this stuff doesn't have to be complex and confusing, because trading can be very intimidating. When you look at a chart pattern, you look at a stock chart, you see all these numbers, you see all these colors and candles, you see these lines, and if you don't know what you're looking at, it can be intimidating. But it doesn't have to be. It can be simplified to a way that everybody can understand, and that's really, you know, that's why I would say. And again, Aaron, I don't know if you're saying that I'm the best, or if you think that I'm the best, but all right, cool. So you just said you are the best. So I really appreciate that, man. I really do. I really, really do appreciate that. The golf game was pretty good today. One life, one chance. The golf game was pretty good. It was an extremely challenging course. It's the same course that they have the PGA tournament on. Extremely challenging course. It's like 7,300 yard. course that's a par 72. It was extremely challenging, but it was fun. My favorite pattern besides the TTG triangle, hmm, I'd say probably the trade line VWAP crossover, Alex. So Alex asked, besides the TTG triangle, which if you follow my channel, you know that's my favorite. He said, what's my favorite pattern besides that? I would say probably the trade line VWAP crossover setup. I just posted a video on the trade line VWAP crossover just a couple days ago. You guys make sure you check out that video. It's a real good video that breaks down the trade line VWAP crossover. Costing 1050. That's a great question. I'm glad you asked it. What are some recommended methods to handling impatience and waiting for a pullback to enter and for a trade to work? One of the things that I teach our members at True Trading Group to help with patience. I consider myself a very patient trader. I'm also a very conservative trader. Now, that has nothing to do with position size. I trade with large size, but I'm a patient and conservative trader. And that talks to conservative versus aggressive trading styles. If there's anyone in here that's a member of the TGD group, you guys can attest to my patience. And I think that's one of my strengths as a trader is my patience and my ability to be a sniper and not a machine gunner, really pick my spots. You guys hear me talk about that a lot. And I think a tip that can help you be patient is it really is a way of thinking. And I'm going to say something to you right now that this is covered in the trader psychology course that I just released last week that I'm going to get into, and I'll talk to you a little bit more about that in a minute. But it's about a way of thinking. And I just published this trader psychology course for TGD members. Part one of that course. Part two is coming out real soon, but I just published part one, and it's really designed to get traders to think a certain way. And your question, Costin, is specifically related to this. So in order for you to become a patient trader, it's easy for me to sit here and just say, oh, well, just be patient. Well, that doesn't help. Obviously, you're trying to be patient, but you're struggling being patient. So what is a tip or a method that can help you? And this is the way I want you to think about it when you're analyzing a trade and you're trying to determine, are you going to wait for a pullback or are you going to chase the stock at where it is? A couple of things I want you to think about. First, if you're thinking, should you wait for a pullback or should you be chasing the stock right now? Ask yourself this question. If you were already in the trade, what would you be doing at this very moment? Ask yourself that question. If the answer is you'd probably be taking profits, you're chasing. You just answered the question for you. So that means wait for the pullback. You don't want to be buying the stock right now just because you're not in it. And now you're going to buy it because now you're chasing it. Your FOMO is kicking in. But what if you were already in the trade? If you were already in the trade and you weren't chasing it, would you be taking profit? Would you be holding your entire position? Would you be adding more? What would you be doing at this very moment? And if your answer is taking profit, then you absolutely cannot buy the stock at that level. You have to wait for a pullback and a reset. All right. Another thing I want you to remember, if the stock's truly strong, you're going to get more than one crack at it. So if you miss the first setup, you miss the first move, don't feel like you need to chase that move if you miss the first one. Because if the stock really is strong, it'll set up again. And then it'll set up again. You'll get more than one opportunity to buy that stock. So don't feel like you need to chase that first move. Don't think that's the only move the stock's going to make on the day. Now, it might be the only move the stock's going to make on the day, but that's not a trade you want to be in anyway. You don't want to be in a one and done type move. You want to be in a stock that's going to break out, base, consolidate, and continue. Those are the stocks you want to be in. Those are the ones that will give you 1, 2, 3, sometimes 4 different entry points throughout the course of the morning or the course of the day. So that's one thing that I want you to think about. The other thing I want you to think about is your risk on the trades. That's what I want you to really think about, your risk on the trades. A conservative trader likes to buy stocks on pullbacks into support. Aggressive traders like to buy stocks on breakouts through resistance. That's the difference between a conservative and aggressive trader. It's got nothing to do with position size. You can trade with $100 positions. I can trade with $100,000 positions. You can be aggressive and I can be conservative. Position size has nothing to do with it. It's a style of trading. Now, I like to buy pullbacks into support levels because I know that it gives me the lower risk entry point. Now, if you're buying a stock on a breakout through a resistance level, that means that the support level that needs to be your stop loss is much, much further away because you're buying the very top end of the consolidation. I'm buying the bottom end of the consolidation. So I've got a jump on you. I've got a head start on you. Now, if I'm wrong at the base of the consolidation and I'm wrong close to my support level, I'm getting stopped out, but I'm losing very little because I have a very low risk entry point. If you're wrong chasing the stock through the break of the resistance level, you're going to get hurt because you're very far away from the support level. What are you going to? You can't stop out in the middle of the consolidation because now you're just not giving that. Now you're not giving the stock the room that it needs. So a positive of conservative trading and waiting for the pullback is that when you lose, you're not going to get crushed. Okay. But the con is you might miss a couple moves. A stock might break and push and never give you the pullback, and you're going to miss the trade. But at least you're not going to lose on it. On an aggressive trading style, the con is when you lose, you might lose big. The pro is you'll rarely miss a move. So let's look at the two and let's weigh them. The con of the conservative strategy is that I may not make money. I might miss a trade. The con of an aggressive strategy is that if I'm wrong, I'm going to lose a lot. Well, I would much rather take the negative that's no change to my P&L than is a big hit to my P&L. And when you start to think of trading this way, and this is what I mean about this is the trader psychology course. And when I published part 1, this is the stuff that it talks about. It's getting you to think a certain way. It's getting you to look at trading differently and think about trading differently, all designed for consistent profitability. And little things like this are designed to help you be patient. So these are just a couple of little tips, Costin. That is a great question. I'm glad you asked it. But those are just a couple of little tips that, if you start to think that way, will start to mold you into being a much more patient trader. Yes, Charlie Lee, you said you say professional education. Did you actually go to college to study the stock market? How does one get a real professional education to learn the stock market? So, Charlie, when I went to college, I originally started out as an accounting major. Hated it. Miserable. Totally hated it. Then I took a portfolio management course as part of the business credits that I needed to fulfill as a business major. And I took a portfolio management course and I fell in love with it. That was my first experience of the stock market and finances. And then I paired that with an economics course, and then kind of how global markets kind of all tie together, like how an election in one country could affect oil prices, that could affect corn prices in another country, like how the global markets all are tied together. And I was hooked. And then I switched my major to finance. So then I had the finance degree with a strong economics background. And then that's what got me the job at the hedge fund. But I didn't know how to trade when I started working at the hedge fund. So when I say a professional education, I mean that not my professional education at college. I received a professional education at a hedge fund on Wall Street. So I got hired at that hedge fund right out of college. And before I was able to trade, I had to go through a 3-month educational program. I'd literally sat in a classroom for the first 3 months of my employment. And that is the professional education that I talk about. That's the same stuff, all of that stuff that I learned. That's the stuff I simplified, broke down, and I created the TGD curriculum. So when you guys go through the TGD curriculum, you're getting a crash course on what I got when I worked at the hedge fund. That's what I mean by professional education. Yo, Joe Blow, what's up, man? Costin, another really good question. Another question Costin has is there a subgroup of stocks that new traders should avoid, even though trading with a small account? That's a really good question. The stocks that I would say that I would advise new traders stay away from are the ultra low float, super volatile, small cap short squeeze type plays. I think those are the stocks that I think that if you're a brand new trader, those are the stocks I think you should stay away from because the volatility is through the roof. Your risk is going to be a lot higher than, as an inexperienced trader, you might think your risk is X, but in reality, your risk is Y because you're not familiar with that type of volatility. And you can, if you're, especially if you're brand new and you're trading with a small account, you can get hit and you can just wreck. You can lose half your trading account in one trade. So I would say, and those are the ones that are the most attractive because those are the ones that are up 100%, 200% on the day that everyone's talking about on Twitter, and social media and on stock Twits. Everyone's talking about. So it's going to be hard for you to not trade them. But I don't think you should trade them until you're ready and you have a better understanding of risk management and a better understanding of how those stocks trade. I'm talking about the real super volatile stocks that halt 3, 4, 5, 6 times within a 2-hour span. Okay, those are the ones that I think that new traders should stay away from in the very beginning of their career. JS Branton, these are really great questions. JS Branton, great question, man. How do you suggest one enters a trade with a small account? Don't have the buying power to tier in. Enter where would you enter a tier one, or confirmation where you enter a tier two. If you cannot tier into your position, so this question goes right into what this live stream is going to be about, and that's going to be the tier trading strategy. I'm going to talk to you guys about the tier trading strategy and how I used it to catch a 32% gain on the bulk of my position on a Boeing trade. So this question plays right into that. My suggestion to you, JS Branton, is that if you have a small account and you're held under PDT, obviously, if it's a small account, you're held under PDT, you can't tier into your position. So you're going to have one position size that you're comfortable with based on the risk on your trade. I would say you should be better. You'd be better off waiting to where you would enter a tier two. Because if you have a very small account entering tier ones, you might be wrong a lot more on the tier one entries. And that just might be like death by 1,000 paper cuts type of thing for you if you have a small account. So I would say look to enter a tier two position, your full size, at the tier two entry points. And then what I suggest is that you tier out of your position as the stock and the trade works in your favor, because under PDT, you can tier out. You just can't tier in. For example, if you were to buy 1,000 shares of a stock and then you sold 250, then you sold 500, then you sold 250. That's one day trade. It's one round trip on your buy. But if you bought 500 shares and then you bought another 500 shares and then sold 250, 500, 250, that's 2-day trades because you bought two 500 share lots. That's going to count as 2-day trades on one 500 share trade and another 500 share trade. So you can still use the tier trading strategy. It's a very common misconception that small account traders cannot use the tier trading strategy. Wrong. You absolutely can use a tier trading strategy designed specifically to help you stay in winning trades longer. The tier trading strategy is designed to do two things. One, keep your losses small. Two, stay in winning trades longer. Now, if you're a small account and you can't tier in, then to keep your losses small, you're going to have it's not that part of the tier trading strategy is not going to really apply that much to you because you're going to have trouble tiering into your position. But you can absolutely tier out of your position, and that's how you can stay in winning trades longer. You probably have a lot of instances where you buy a stock, it goes up, you sell it, and then it goes up way higher, and you're like, oh man, why did I sell? That is what the tier trading strategy is designed to help prevent. So that's what I would say, JS Brand, on how that I think small accounts can still utilize and take advantage of the tier trading strategy. S7 Enterprise asks, hi, do you use hard stops or mental stops? So I personally use mental stops. The only time I use hard stops is if I have to step away from my computer or if I'm in, multiple positions and I'm finding it difficult to monitor all of them at the same time. Maybe one of them is very volatile. Maybe I have a large position in one. It really needs my focus. I might set a physical stop in another trade that's a little bit of a slower mover, just as a safety net. But anytime you get up and walk away from your computer, you better set a physical stop loss. The reason why I don't set physical stop losses is because I know that I have the discipline to stick to my stop. If you don't have the discipline to stick to a stop, and let's say you buy a stock at 525, your stop loss is $5, it gets to $5 and you don't do anything. And now it's at 490 and you still don't do anything. And now it's at 480 and you're looking deer stuck in headlights. Now it's at 450 and you're like, oh, well, it's going to bounce now. It has to bounce now. It just had such a big down move. I'll sell it when it bounces. And all of a sudden it goes to 425 and you're sitting there shell shocked and you don't know what the hell just happened. And you just lost 3 times as much as you thought you were risking on the trade. If that is something that you think that you're going to do, meaning that you don't yet have the self-discipline to actually stick to your mental stop, you got to use physical stops. It's going to save you. It's going to save you. Believe me, it'll save you. You guys always have to be more concerned with how much you're going to lose if you're wrong than be infatuated with how much you're going to make if you're right. So if you struggle with risk management and if you struggle with self-discipline, I suggest setting physical stop losses. I use mental stops though, because when I have a stop loss, if I say, guys, I'm long Roku at 135, my stop loss is the 133 area. When I say area, it's because I want to see how the stock reacts when it gets to 133. Does it get to 133? And I'm not going to sell the position just when it prints 132.99. Maybe it gets to 132.80, 132.75, and then it shoots back up to 133.50 and shows me there's buying at that level. I like to see how the stock reacts, and I like to read into the price action at the stop loss area to tell me and show me signs that there's still support here. The reason why that's the stop loss area is because I think that's just below the support level. So when the stock gets to that support level, I'm waiting to see how does it react. Is it dead? Is it just kind of sitting there doing nothing? Did it just blow right through it? Or did it touch the level briefly and it ricocheted and shot right back off of it? But I know and I trust myself to have the self-discipline to stick to my stop loss if I'm not seeing signs of support and I exit my trade very quickly. Okay, I exit my trade very quickly. If you don't have that discipline, you have to set physical stops because that's how you can get yourself in a lot of trouble. Griffin Smith asked, do I use any special scanners like Trade Ideas? Trade Ideas is a good scanner. I don't use Trade. I mean, I do have scanners, so I trade with Lightspeed. I also have just so my scanners are leading gappers, high a day, and unusual volume, or like above average volume. Those are the three main scanners that I use. Um, and then I also just have like the your top gainers. Top gainers I just have on my TC2000. Trade Ideas is a very good scanner though. Trade Ideas is a very good scanner. E-Trade Pro has well, I think they don't have E-Trade Pro anymore with when they got rid of the what's it called, the commissions. But E-Trade has a really good scanner. There are good scanners out there. Trade Ideas is great though. I think Trade Ideas is one of the best scanners out there. And like I said, I use high a day, okay, leading gappers. I use that for the morning, and then above average volume or unusual volume. Yeah, guys, I think I'll take maybe one or two more questions, and then we'll get into the tier trading strategy. We'll get into the recap. Lowdown asks, when are they changing the PDT rule? I haven't heard anyone talk about them changing the PDT rule. If they change the PDT rule, that'll be news to me. I have not heard anyone talking about changing the PDT rule. What platforms are best for beginner traders? Robinhood and Webull. I don't really like Robinhood that much. The execution's not that great. I think for a beginner trader, I think you're best off with TD Ameritrade, E-Trade, or Charles Schwab. I think the three main brokers, I think they've got user-friendly platforms. They've got good execution. They've got great customer service. They have educational tools that can help you learn. And if you ever have any problems or issues, you can call them right up and they'll help walk you through if you have a question with their platform. If you guys are brand new to trading, I would say probably use one of those three. Um, Lightspeed is more. Lightspeed, I think, has the best execution. Lightspeed is more for professional traders. Lightspeed is used by a lot of institutions. A lot of hedge funds use Lightspeed. That's where I use Lightspeed when I worked at the hedge fund. That's how I learned how to trade, was on Lightspeed. That's why I'm comfortable with it. But it's not really as user friendly as some of the others. You don't really get their customer service is okay, and you don't have all the tools and the educational aspects as you would find in some of the bigger brokers like E-Trade and TD and Charles Schwab, because their average user is your typical retail trader or inexperienced. They're not, professionals and institutions. So, Lightspeed won't have as much of that educational stuff. So if you're a brand new trader, I would suggest E-Trade, TD, Charles Schwab, one of those. Nice. Gemini, greetings from LA. Your first time catching my live stream. You are officially 12 hours behind me. Guys, for those of you that didn't know, I'm halfway around the world. I'm in Dubai right now, and jet lag is a mug. It's 3:30 in the morning for me, and I'm still up. I'm not tired. I can't fall asleep. That's why I decided to do a live stream and come on and talk to you guys, because I can't sleep. The jet lag's crazy. The time difference is crazy. The stock market opens at 6:30 p.m. for me here and closes at 1 a.m. So Gemini, you're literally on the opposite side of the world for me. So what's up? Tarjay T, thank you very much. Tarjay says, Mike, you're an awesome mentor. I love your trading style. Thank you. I really appreciate that. All right, guys. We'll do one more question. Let me see. Manny, what's my take on the offshore brokers? Listen, the offshore brokers, they serve their purpose. Especially if you like a lot of times with the offshore brokers, the commissions. Let me see. Oh, because you have no PDT and then you have a 4-to-1 margin, but the commissions are high and the customer service sucks. Yeah, your customer service is going to be terrible with the offshore boutique brokers. The customer service is going to suck. The positive is that some of those offshore brokers get the hard to borrows on a lot of the small cap stocks. So if you're a trader that likes to short the small caps, you'll have better luck getting a borrow from one of the offshore boutique brokers than you would getting a borrow from E-Trade. It'll be a lot more difficult to short on TD or E-Trade. But the negative is financial security. You don't have the security on your capital like you do with some of the larger U.S. firms, and one of those firms can go belly up any moment, and I'd be concerned on getting my money out of there. So the offshore brokers, you don't have the same kind of financial security, and if I'm going to park my money somewhere to trade with, I better be feel safe and secure, warm and fuzzy at night when my money is sitting with them. All right, guys. So that was a real good Q&A session. Let's get into the end of the day recap. The end of the day recap is going to be, we're going to talk specifically about two things. That's the tier trading strategy. All right. And it's also the importance of identifying levels before you enter a trade. These are lessons that are covered in the advanced courses that are on the website. I'm going to remind you guys again, because you have 3 more days, not even. Now you've got less than 3 days. Or no, yeah, it's still midnight. Yeah, you have 3 days. I don't even know what day it is because of the time change. So I'm going to remind you guys again before I get into the end of the day recap. We have right now 30% off a 1-year all-inclusive membership to True Trading Group. That 30% after December 20th is dropping down to 25%. So if you guys are on the fence and you're thinking about joining the team and you want to be part of the fam, make sure to take advantage of the offer before the 20th to get the 30% off. With that, you get 1 year chat access, 1 year of the text message trade alerts. So in case you can't be in chat, you can still follow along with what it is that I'm doing. All the email swing trade alerts and analysis, and you get all the courses, everything, all inclusive. You get the beginner and foundation courses, you get the advanced courses, you get the options courses, you get trader psychology course part 1, as well as all future courses coming out down the road. The trader psychology course part 2 is coming out soon. And in the new year, you've got the swing trading course coming out, as well as a bunch of other educational content that I'm going to be releasing and publishing throughout the course of the year. As a member, you get access to all of it. There's no upsells at True Trading Group. When you become a member, that's it. You're a member, you get access to everything we have. You will never be upsold as a member of True Trading Group. You join, you get everything. So that is 30% off right now until December 20th. Right? And then after December 20th, it drops down to 25%. So you guys can use coupon code TTG2020 at the link that was posted in the chat. You guys see the link that's posted in chat. You can click on that link and then use coupon code TTG2020 to get the 30% off. If you have any questions about the membership, send an email to info@truetradinggroup.com. Again, that's info@truetradinggroup.com if you have any questions. So I'm going to keep reminding you guys about this because what I'm going to cover with you right now, the tier trading strategy, this is an entire section in the advanced courses is dedicated to the tier trading strategy. That's what I teach all of our members. I'm going to get into that with you today and show you how it helped me make 32% on the bulk of my position on put options on Boeing. Let's get to it. Boeing yesterday had a big sell-off yesterday, big down day for Boeing yesterday because news that the board was considering halting production of the 737 MAX, the airplanes that had the issues with the crashes and the software glitch. That's what caused the sell-off in Boeing yesterday. Boeing closed near the lows of the day yesterday. It was a very high volume sell-off day. Take you guys back to the daily chart. You can see how heavy the volume was yesterday. That's a huge volume bar for Boeing. You're talking well above average volume for that gap down day. We closed near lows. I thought we had further downside room down to 320. 320 was the area that I thought we had room to. So now as I come into the day today, the news is out, okay, after the bell yesterday that the board is halting production of the 737 MAX. Now I'm thinking to myself today, Boeing is front and center. I think we're going to get more room to the downside. I think there's an opportunity here to buy some put options. Stock is very expensive. I'm not going to short it, all right, but I'm going to buy some put options. And the put options will move pretty well if Boeing is going to make a $5, $6, $7 move. All right. You guys will learn how to trade options in the options trading course. Options is a beautiful vehicle for all types of traders. It's great for small accounts because you can hit home runs very easily on options trading. They also do carry a greater level of risk, so you got to make sure you guys know what you're doing. All right. And again, the options trading course is everything. Everything's included in that year all-inclusive membership with 30% off. So you get the options course too. All right. So you guys will learn how to trade options. I'm not going to get into too much about options on this live stream. We'll do that another time. I'm going to focus on tier trading strategy, but this specifically was an options trade. So there's a level that I need to focus on. Before we get into tier trading, let's talk about levels and why it's so important that you identify levels before you enter a trade. You need to identify your levels because when the stock reaches those levels, you are ready to act. You're expecting the stock to do something. You're expecting the price action to react in a certain way once a certain level is reached. And then when the stock does react that way at that level, like you expected, it gives you confidence to pull the trigger. You no longer have to sit there and try to analyze the setup on the fly. You're ready to go. And the window of opportunities open and close quickly throughout the day. So by you identifying these levels before you pull the trigger, it's going to put you in a position to capitalize on the opportunities. All right. So when you look at Boeing, let's go back to the daily chart. All right, now let's talk about our levels. So you have two levels, two price points I want you to focus on. Yesterday's low, which is 326.43, and this previous pivot low in mid-October that is 324.40. So you're from 324.40 to 326.40. $2. $2 little range here. And I'm saying if we break below that level, we should get down and test the 320 area, which is this previous pivot low from mid-August. So now that I know that we've got these two, I just didn't mean to delete that. Let me draw that line back for you. Okay, there's that line. So now that I know that this is this 324.40 to 326.40, I'm saying to myself, I'm looking for 325 and change. 325 and change, right smack in the middle. So if I've got a level of resistance that I'm expecting, because these two prior lows were key areas of support for Boeing, we're gapping beneath them. So if Boeing pushes up back towards those levels, you look for prior support to become resistance. So 324.40 to 326.40, I'm expecting there to be resistance. So let's call it 325 and change, right in the middle. There's the line. There's the line I drew, 325 and change. So now these are my two levels. Before the stock market even opens, these are my two levels. And I know exactly what I'm doing when the stock reaches these levels. If we get rejected at that 325 and change area, I'm going to buy my put options, and my target's 320. 320 is a very key area of support for Boeing. If it gets below 320, you could see Boeing make an extended move down towards 300 and get back to the 2018 lows from November and December. But I know I'm expecting 320 to be an area of support because of this pivot low in August. It's a very aggressive, strong pivot low. That's a V bottom. V bottoms are very powerful. You can see right here, it looks like a V. Okay, this is called a V bottom. V bottoms are very powerful. You also see the increase in volume off the V bottom. That's a sign of strength and tells you that that support level is going to be somewhat of a significance when it gets back there and tests that level again. Okay, so I'm expecting there to be support there. Let's go back to the 3-minute chart now. There's the two lines that I just drew on the daily chart. There they are. I did not move them. I drew them. You saw me draw them on the daily chart, and now I just went intraday to the 3-minute. Look at where these lines line up. This is why it's so important to identify levels before you enter the trade, because Boeing opens up from the gap down, and what does it do? It pushes right up towards the 325 and change area, gets as high as 326.09, and tails. This rejection right here was exactly the type of rejection that I was looking for. We rejected at that resistance level and pulled all the way back down to VWAP. The other thing that I liked was the trade line, which is this yellow line on my screen, the 9 exponential moving average, was also lining up right at that resistance level. Now that gives me a little more confidence because now there's another resistance indicator that can work in my favor on this trade. So what I'm doing now at this point is saying, there's my rejection. That's exactly what I was looking for. And I went in here, guys, and right there is where I bought the 320 strike December 20th put options at $3 a contract. Right there is the entry point. Stop loss is if Boeing does this. If Boeing breaks through 326, I stop out of that position. Why is that the stop loss? Well, my entire trade idea is based off of the premise of this area being resistance. So if this area gets broken to the upside, meaning it's no longer resistance, then I have no business being in the trade because the whole reason why I entered the trade no longer exists. So I would need to exit the position at that point. But in the meantime, that rejection at that level and the trade line gives me my entry opportunity. Now, I'm ready to pull the trigger when this happens because I already have this level identified. I've already drawn this level on my chart. So when I get that price action at that level, I pull the trigger. It gives you confidence. It makes your decision making very fast You don't have to sit there and try to analyze the setup on the fly. Then we see Boeing pulls in. We start to try to find a little support here around VWAP. Okay, and then we try to bounce a little bit, and what happens again? We get rejected again at the trade line. That's another heavy rejection at the trade line. You see this tail that gets put in here. That's a real strong tail to the downside. Okay, showing us they got rejected again at VWAP. Now at this point, I'm saying now we should be good. I should get the rollover move to 320. Let's see what happens. Trade line crosses underneath VWAP. We get a quick little move lower. I take some profit off the position. I sold 25% of the position at $3.40. This is where the tier trading strategy comes into play. The tier trading strategy, how I teach all of our members, is to tier out of your position in pieces. I don't sell my entire position all at once when a trade is working in my favor. I sell it all at once when I'm wrong. When I'm stopping out of a position, I'm selling my entire position all at once. I'm not trying to be cute. When you're wrong, get the hell out. Don't try to be cute and dance around for a while. If you're wrong, be wrong and get out. But when you're right, a lot of traders are so quick and antsy and anxious to jump out of the position and grab that P&L and capture that P&L, even though the chart could be telling them that the stock is going to continue in the direction that they're in. Not to say there's something wrong with taking profits. There's nothing wrong with taking profits. Nobody ever went broke by taking profits. But you can't trade your P&L. And when you're jumping out of the trade too soon, it's most likely because you're trading your P&L. And you're not trading the stock in front of you. You have to trade the stock in front of you. I don't even see my P&L during the day. I don't even see it. I trade the stock in front of me. And I know if I execute a good trade, P&L will be a byproduct of that good trade execution. So I sell my positions in 3 tiers. Tier 1 is 25% of my position size. Tier 2 is 50% of my position size. Tier 3, 25% of my position size. So if I'm going to trade with, let's say, 10,000 shares, the stock moves in my favor, I sell 25% on the first move. The first directional move in my favor when I'm in a profit and I'm sitting maybe around a 1-to-1 risk reward, I take 25% of the position off the table to protect my downside and lock in profits. I hold on to the bulk. Now I'm still holding 75% of my position. In that scenario, if I had the example I used with 10,000 shares, let's say a stock moves in my direction, reaches and eclipses the 1-to-1 risk reward, I'll take 25% of the position off the table, protect my downside in case the trade fails now, but I'm still holding 7,500 shares looking for more. Then if the stock gives me the follow through that I was looking for when I initially entered the trade, meaning my profit target is being reached, you should have more than one profit target when you're going into a trade. I have 3 different profit targets in a trade, and that's where I'm selling tier 1, tier 2, tier 3. You should have the same. You don't want to just have one profit target. If you're my final profit target today was going to be around 317, 318 if Boeing broke below 320. Now, if that was my only profit target on the day, I lose money today. Boeing becomes a red trade if I'm only sticking to one profit target. You need to pay yourself as your profit targets are reached. Not every trade is going to be a home run. You're not always going to get in a trade that's just going to blow through levels and is going to be an all-day runner. They happen, and that's great when they do, but that's not what happens every day. You can't go into the day looking for home runs. You have to trade for consistent profitability, and that means you need to be able to hit singles and doubles. You can't be swinging for the fences every single time. Otherwise, you would have struck out today on Boeing. Well, I'm walking away with 32% gains on the bulk of my position because of the tier trading strategy. So 25% of the position comes off the table there. Then we extend new low of the day. And now we're getting where, guys? We're getting right in front of the support level that we identified on the daily. And as we got down right here, the bulk of my position came off the table on the put options. Again, that's a $320 strike. December 20th expiration put options. I bought them at $3 a contract. I sold 25% at $3.40. I sold 50% of the position at $3.95 for a 32% gain on the bulk of the position. 320 was my profit target. So I better make sure that I'm taking profit off in front of that level. because if that level does not hold, I think we're going to get extension to the downside. That's why I'm holding 25%, so I can stay in winning trades longer. But I'm taking profits off in pieces as we approach that level in case that level holds and the stock reverses. You don't ever want to let a winning trade turn into a losing trade, ever. It's a horrible thing when a winning trade turns into a losing trade. And it's usually because you're greedy and you're not taking profits. You're not tearing out of your position as you should. Because as the stock works in your favor and you're taking profits off the table, you're doing two things. You're putting money in your pocket, but you're also taking risk off on the rest of the trade. So if the trade ends up failing and you don't get the real follow through, it's okay. You've already taken the bulk of the position off the table. You have very small risk right now. That's what happened in Boeing today. So I had already taken the bulk of my position off the table at $3.95 a contract. That's a 32% gain. And long and behold, that 320 level that we identified on the daily chart pre-market before the market was even open held. And Boeing completely reversed and broke through the high of the day. And right here, once Boeing broke above VWAP and above the trade line, right here, you see a Boeing broke above VWAP. I exited the last piece of the position at $2.44 a contract. So now think about this. I took a loss on the last 25% of the position, but it's only 25% of the position. The idea with the tier trading strategy is that you take profits off as the trade works in your favor, and that holding on to that last 25% will keep you in a winning trade longer, because if Boeing broke below 320, I'm in still 25% of the position. I'm getting real big, strong follow through, and my final take profit will be when Boeing gets to 317, 318, and then it becomes a home run trade. But if that doesn't happen, I'm taking my profits off as the trade approaches my profit targets. And if the trade reverses and it's not a home run, I can still walk away with a single or double. That's the beauty of the tier trading strategy. This is an entire section of the advanced trading course that's available in the TGG curriculum. This is the stuff that is included. This type of education is what is included when you guys sign up for the 1-year all-inclusive membership. Guys, I'm going to keep reminding you because it's such an insane deal that you get 30% off 1 year of chat, all of my courses, and all future courses coming down the road. It's a sick deal. So I'm going to keep reminding you about this. And this is the kind of material that you'll learn. Tier trading strategy is one of the chapters that's covered in the advanced courses. A lot more other stuff in there. Okay, but the tier trading strategy directly was the result, or excuse me, I just said that backwards. Today's win in Boeing was a direct result of using the tier trading strategy. The tier trading strategy is something that I learned at the hedge fund because hedge funds and institutions have to get in and out of large positions and pieces. You can't go and buy $10 million worth of Apple in one trade. You have to buy it in pieces, and you have to sell it in pieces. So that's how I learned how to enter and exit in chunks. Now, I took that tier trading method and I just tweaked it a little bit so that it would make sense and relate to my personal trading. That's what I implement in my trading today. That's what I teach all the TGD members. And that is the Boeing trade. And that's how, guys, the tier trading strategy is, directly helped me pull out 32% gain on the bulk of the position when the trade failed. 320 held, but I'm still able to make a nice chunk of profit. Let me delete these other. So there it is, guys. There's the entry, first take, second take, final exit. And because of time decay and everything, the exit here, even though the price of Boeing was lower than when I entered, the option contract was lower because of time decay. Time decay is something that you guys will learn in the options trading course. There's a lot of different factors that affect the price of an option contract. It's not just movement. So a stock, the price is the price. When you buy shares of a stock, the price goes up, the price goes down based on the movement of the stock itself. An option contract fluctuates. The price is formed from multiple factors. You have the price of the contract will be affected by the price of the underlying stock. So the option contract of Boeing is going to be affected by what the price of Boeing stock is actually doing, but it's not an even one-to-one ratio. You have other factors like time decay, meaning the closer that that contract gets to its expiration, the less valuable it becomes if it still has not reached its strike price. You also have something called implied volatility. Implied volatility affects the price of an option contract, and that has to do with, well, how volatile is the underlying stock itself. All of these things affect the price of an option contract. So when you're trading options, it's important you understand how that works, and that's stuff that you guys will all learn in the options trading course. All right. So like I said, guys, that's the tier trading strategy. All right, in a nutshell, that's the tier trading strategy, and that's how I was able to use that to my benefit today. I thought you were trying to be here today, but never entered because it was a little pricey. That's okay. All right, Jose, that's all right. That's okay as long as you're learning. As long as you're learning. So you didn't enter the trade because it was a little too pricey. Yeah, listen. When you're trading contracts of some of the larger caps like Boeing, Amazon, Roku, those contracts are going to be a little bit more expensive. You can trade SPY contracts for 30 cents, 50 cents a contract, and you get real nice moves and real nice action in SPY contracts. Those are going to be a lot cheaper. But some of these other names, especially when they're in play, okay, meaning implied volatility is on the rise, which in Boeing, implied volatility has been on the rise because of what's been going on in Boeing. It's been in the news. The stock's been making much larger than average moves. Implied volatility is up. It's going to be a more expensive contract. All right. Great advice, Griffin. Griffin Smith, great advice. You need to learn before you even think about trading. I could not say it any better. Griffin Smith, excellent, excellent, excellent advice. I tell that to every single new trader that comes across my way. Learn first, guys. Seriously, every single new member that signs up to True Trading Group, I usually have like a little welcome conversation. We have a discussion with them. It's so important that you learn how to trade first before you just dive right in. It's too many traders. They just start trading with real money before they know what they're doing, and they lose that money, and they don't have any more money to add to their trading account. And you put yourself out of trading before you even ever gave yourself a chance. And it's really a shame when that happens because you might be a phenomenal trader. You might be a better trader than me, but you don't know it because you never gave yourself a chance to learn. I always make the analogy that if you didn't know how to play poker and you just decided one day, hey, you know what, I think I'm going to try to learn how to play poker. Your first experience would not be entering the World Series of Poker and joining, I think it's like a $10,000 entry fee. You're going to be going up against the best poker players in the world with $10,000 on the line. None of you would do that. None of you would do that. What would you all do? You would all go online. You'd probably play online poker with fake money. You'd probably go read a bunch of books. You'd look up a bunch of things on YouTube or the internet on how to play poker. Why don't you do that when you're learning how to trade? Why do you take a couple $1,000, put it in a trading account, and just go start throwing it out there in the market? When you open a trading account, that's you, and you put your hard-earned cash in that trading account. That is no different than you going to the World Series of Poker and submitting that $10,000 entry fee. And once you sit down at that poker table with the best poker players in the world, that's no different than you entering a trade and getting into the market, because guess what else you're doing? You're going up against the best traders in the world. You're going up against everybody in this YouTube live stream. You're going up against me. You're going up against Goldman Sachs. You're going up against hedge funds. You're going up against computers and algorithms, traders with more money than you, traders with more capital, with more experience and intelligence than you. You're going up against computers that are faster than you. Sounds kind of scary, right? Why would you do that without learning first? Because you sure as hell wouldn't go sit down at a poker table with the best poker players in the world with real hard money on the line if you don't know how to play. So I always recommend every single new trader. These are for new traders. And, we have a lot of experienced traders at True Trading Group too. That's a whole different conversation if you're an experienced trader. But if you're brand new, do not, please do not just start trading with real money right away. Paper trade, open up a paper trade account, which means you're trading with fake money, and learn. Every single new trader that joins True Trading Group, I say, you open up a paper trade account and you are not allowed to even open a real account. You can't even open a real account until you take all the beginner and foundation courses and you pass all of the quizzes. Every chapter has its own quiz. If you score 85% or higher on the quiz, you get a badge for that course. If you earn all the badges for all the courses, you become TTG certified, which is lets everybody else know that you know what you're talking about. You went through the system, you got the education that you need. But I tell people don't even think about opening an account until you get all the badges on the beginner foundation courses. Then move on to the advanced courses. Go through all of the material, learn, and trade with fake money while you're learning. So that when there's things you don't understand or you make mistakes, you have to find yourself when you're starting out trading. You don't know what kind of trader you are. You don't know what style you like best. You don't know your strengths. You don't know your weaknesses. So wouldn't it be nice to figure out your strengths, your weaknesses, and your style without having to lose all of your money figuring that out first? Take the time to learn this skill first. Don't just dive into the markets head first. I know a lot of people are anxious. It's exciting, to make money, but it's not exciting losing money. And if you guys go in there without knowing what you're doing, you're going to lose what you started. You're not going to give yourself a chance to become successful because you're never going to give yourself a chance to learn, and you're going to lose all your money before you ever give yourself a chance to learn. So, Griffin, excellent advice. I could not have said it any better myself. Alex, good question. Alex asked on volatile stocks, do I go in and out with hotkeys? I always go in and out with hotkeys. I have hotkeys set up. I always trade with hotkeys. That's number one. And when a stock is working in my favor, I'm usually taking profits on the offer. So I'll put limit orders up on the offer. And as the stock works in my favor and it moves higher, I'm just I'm taking pieces off and I'm getting filled as the stock goes higher. But when I'm wrong, I'm always market ordering out my position. I'm not trying to get cute with limit orders. I'm exiting my position. If I'm wrong, I want out and I want out right now. I'm not trying to stick around and be cute with it. This Gemini, that's hilarious. If I see a computer sit down at a poker table, I'm out. That's awesome. That's really funny. That's really funny. That's really funny. Yeah, Griffin, man. Listen, Griffin. I can tell you're not new at this. I've just seen a couple of your comments. Plus the psychological effects of big losses when you're first starting out can be crippling to a trader's psyche, and a trader's psyche is very, very important, especially early on. It continues to be important throughout your trading career because you cannot doubt yourself. You have to be a confident trader. There's a difference between an arrogant trader and a confident trader. That's something we can get into another time. But you've got to be confident, and taking losses like that early on can really start to mess with your confidence. Griffin, excellent advice, man. Thanks for partaking in the chat. I really do appreciate the involvement and the participation. What do I think the market's going to do the next 5 days? I think we push. I think we can push higher. I think we can push higher. We probably would have went higher, if it wasn't for Boeing. Boeing is a huge component in the Dow, and Boeing has held the Dow down the last couple of days as the SPY pushes up to all-time highs. Um, you know, I don't see any reason why we can't continue to push higher. I really don't. I think we can put new all-time highs in over the next couple of days. and then I think we maybe have a few more days of some upside, maybe a couple of weeks more of some upside while the China trade euphoria really gets into play. And then once you get after New Year's, then people are gonna be starting to look at Q1 earnings and guidance and expectations, and then that's when I think things might start to settle in a little bit, and then we'll have to see if the more importantly, I think the global economies are going to be really more focused on Q1 to see. We saw Germany would look like they were in big trouble a couple quarters ago. Germany looks like it's stabilized. Europe is looking like it's stabilizing. China is looking like it's stabilizing. Global economies were in trouble for a while throughout the year, and it looks like now that they're starting to stabilize. So I just think that if you start to see global economies start to improve, not just stabilize, but actually improve, then yes, I think markets can continue to push higher in 2020, and then leading up to the election, I think they'll continue to push higher, especially if you get advancement on a possible phase 2 trade deal. If you get progress with the possible phase 2, um, that's when you'll start to get more volatility in the market. A Trump tweet about phase 2, we're close to phase 2, market pops higher. China comes out and says, no, 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 we don't agree to this. Okay, market comes back down. And you're going to get back into that back and forth volatility like you had when we were going back and forth over the last several quarters about phase 1. But I think you'll see that again now in 2020, leading up to the election. It's going to be a major talking point for Trump. He's probably going to campaign on the phase 1 deal and campaign on the promise of a phase 2 deal. He's going to campaign on the strength of the economy, stock market at all-time highs. All of those things are going to be what Trump is going to campaign on. And you could see markets push higher off of that. But then once you get the back and forth again with China, I think that's when you start to see volatility again. You can see pullbacks, bounces, pullbacks, bounces. But I think at that point, the market will have established a new trading range up at the Dow over 28,000. Kind of a long answer to a short question. All right. No, I don't follow dark pools, and Zen Lightspeed is my preferred broker. I do not follow dark pools. All right, guys. So that's it. That concludes our tier trading stream. And again, I'm just going to keep reminding you guys, the tier trading strategy. I just briefly touched upon it, but you guys can see probably how kind of eye-opening a lot of this information may be, and it really can make a huge difference in your trading by implementing this tier trading strategy. And just because you have a small account, don't be afraid to use it. Don't be afraid to implement it. Give it a shot. Try it out. I love it. I use it every single day, and I teach all of our members to trade this way. I teach all of our members to trade this way. So this is just a tip of the iceberg, guys, on what you get in the courses. We go into much greater detail on the tier trading strategy. We talk about specific examples on where you're exiting, where you're entering tier 1, tier 2, tier 3, where you're exiting tier 1, tier 2, tier 3. Times it makes sense to tier up, times it doesn't. There's a lot more detail that goes into it based on certain chart patterns and setups. All that's covered in the courses. And again, the tier trading is just one section, one chapter of the advanced courses. And that's everything that you guys get with the 1-year all-inclusive membership. So again, 30% off a 1-year all-inclusive membership plan that gets you access to all of the courses. That's beginner and foundation course, advanced course, options course, trader psychology course part 1, and you also get access to all future courses that come out down the road, like trader psychology course part 2 and swing trading and future courses that I'm going to be coming out with a bunch more stuff next year as well. You get access to all of it. We really are like the Netflix of trading. Once you subscribe to Netflix, you get access to all their content. Once you subscribe to TTG, you get access to all of our content and all of our resources that you guys need to become consistently profitable traders. I want to make sure you have all the information, all the material that you have that you need. There's no upsells. You'll never be upsold at TTG, guys. I see all these people, they say, oh, $1,000 membership or $2,000 membership, and then you sign up and it's like there's 4 more courses that you have to pay $500 a piece for that aren't included that you didn't realize when you were signing up. It's like, what the hell? No, I want you guys to have all the education, get all the courses, get all the material, familiarize yourself with it, ask me questions. You have direct access to me in chat during the day. We can schedule one-on-one mentorship sessions where I go over trades and everything. We break down traders, styles and strategies and strengths and weaknesses and where we can make changes and tweak things. I love the one-on-ones, with all of our members in chat and even the YouTube community. You guys get to see my face and hear my voice all the time. You know my personality. You kind of know who I am. I don't know a lot of you. All I see is a username. And that's why I love one-on-ones with our members, because I get to put a voice and a personality to the username. And it just brings you closer. TTG, we're a very tight-knit, close community. I like it that way. I promote a fraternal type of environment where everyone truly does care for one another and supports one another, because we all share the same goal. We're all in this game together, guys. We're all in this game together. I know. Pete, it's the jet lag, man. It's the jet lag. It's like it's 4:11 a.m. right now for me in Dubai, and I'm still up with all this energy. I gotta go to sleep. 4:11 a.m. But like I said, guys, I was up. I wasn't tired. I felt like this was a really good lesson today on Boeing with the tier trading strategy, and I felt like, let's jump on a live stream. Let me take some questions and let me break down the tier trading strategy for some people. It's a really good lesson. And since I have the energy and I'm still awake, why not? Let's do a live stream. I love interacting with you all and answering questions. So that's it, gang. That is it. Here, I'll type it in chat again. So for those of you interested, there it is. You guys can click on that link that I just posted in chat. All right, and you guys can take advantage of the 30% discount. All right. So that's it, gang. Thank you for joining me. I'm Zen. I'm in Dubai. I'm just here for the week. I love it out here. I love it out here. I try to come here, once a year. I love it out here. It's really nice this time of year too. The weather's perfect. There's they have I call them Christmas lights, but I get holiday lights. But then everything's lit up, like palm trees. There's lights everywhere. It's really cool. It's really cool. It's nice out here. So I'm here for the week. I'll be back on Sunday. I'm back in the States. All right. So again, guys, if you have any questions about the membership, or you have any questions about the discount or anything like that, just send an email to info@truetradinggroup.com. All right. Thanks for joining me, guys, in the live stream. I had a blast, as always. I hope you guys enjoyed the lesson. I hope you guys learned something. And I hope to see many of you take advantage of this deal. You have until December 20th, and then the 30% drops to 25% off. All right, take advantage, guys. This is just a tip of the iceberg. The stuff I show you on YouTube is a tip of the iceberg to what you guys get from the actual courses. So take advantage of it. All right? Take it easy, gang. My usual TG fam, I see we got a lot of members in here. My usual fam, I'll see you guys in here tomorrow. Tesla going to still be on watch. I'm looking at Tesla. I think Tesla in the coming weeks is going to get into the 400s. Tesla is, until further notice, Tesla is on watch. I think this might be the straw that breaks the camel's back for short positions. I think we might finally get a short squeeze into the 400s. We have a major resistance level in Tesla at 385 to 390. If we get through that, you should see Tesla make its move over 400. All right, so that's something that, just an idea, throwing it out there. It's something that I'm going to be watching for the next, for the foreseeable future until something changes. I've got Tesla on watch. All right, take care, everybody. I'm out of here. It is 4:15 a.m. in Dubai, and I'm signing off. I'm going to go try to get some sleep. I'll see you guys in chat tomorrow.